Okay, so let's get back on our market streets, and we're touching with the debt market. Of course, the home for FMDQ Exchange Place. Choma Udu, who is a fixed income dealer at FBN Quest Merchant Bank, is live to us from there at this point. Choma, it's good to see you bright and early on this trading day. Thanks for coming through.
Good morning.
Great. So what's the big story here for me this Tuesday? This is your opening call the debt market. Bring us up to speed.
Okay, we opened today a very quiet market with a bullish bias. Market has been quite mixed. We've seen a lot of bullish tilts at the short end of the curve. However, since the resumption of the sale of the one-year paper at the OMO auctions by the CBN, we've seen a reprice of rates to about 13% at the long end of the curve. For the T-bill, for the bond curve, the long end of the curve, markets are just basically trading at 14.5 levels.
But we thought the rates were beginning to look around 11, 10% or so, but then yields started climbing all over again. What's the catalyst here, Choma?
That's at the short end of the curve. We've seen rates at about 10%, 11%. And this speaks to what happened at the MPC, where we saw some easing about 50 basis points. So we saw, and then they've not been issuing a lot of fixed income as much as we anticipate. So there's been a lot of pressure at the short end of the curve, where we've seen investors try to invest at the short end so that they can quickly rejig their portfolio once the high yield starts coming in.
So when is this high yield coming through in this second quarter? Will that be a new sense of direction in terms of liquidity management? Will it be coming from the debt management office in terms of, they talked about 30-year paper, Naira bond?
I mean, there's no pressure on the central bank right now. Oil prices are currently at about $71 per barrel, a result of the uncertainty in Libya. And then we've seen continued interest from the FPIs, the foreign portfolio investors, into the FX market. So there's liquidity in the FX market. And we've seen also the federal government shift their borrowings for borrowings for the contractors to the promissory notes. We hope that the promissory notes will be issued at yields that are quite attractive to the market.
Yes, those promissory notes are very quite heavy, and I'm sure you fixed income dealers are sniffing around to those promissory notes because you're looking at the yield at which the Ministry of Finance, of course, DMO and CBN will bring them to the market to pay those outstanding liabilities, salaries and pensions and a few things like that. So what level are you looking at here that will make it attractive for the market to say, look, we can take this up, give you the money, pay these folks, and then we can just balance the books at some later date?
I mean, like you said, it's a 30-year promissory notes. And for you to lock in your liabilities for 30 years, I think they should be looking at anything above double. Yes, yes.
You're not going to give your money away. I know, FBN Quest, you're not going to give your money away at any less than competitive market rate for 30 years.
Yes, so they should be quite competitive. The central bank and the Ministry of Finance has to be quite competitive and make those promissory notes attractive to investors.
So that will be north of double digit, something like that, right?
Yes, double digit, definitely. Definitely.
Not north of it. North of it. A little bit.
Yes, very steep. It has to be very steep, yes. Because currently, the bonds are trading at 14.5 in the market.
Oh.
That shows, yes. So it shows an indication of what we should be expecting. That is just the base case for the promissory notes.
Great. It's interesting. Have a great day, Choma Udu. Thank you very much for your time, bringing us up to speed on the debts, or what you call the fixed income street. Let's go to the equity market. Custom Street, downtown Lagos. Temple Ashaju, our business correspondent on the trading floor of the Nigerian Stock Exchange. Temple, this is your Tuesday opening call. Bring us up to speed here.
So the market is down right now, but you might want to describe it as basically flat at 0.01%, but it had widened beyond that before to some 0.03%. We saw the likes of Union Dye Consult trying to weather the storm there, as well as Chams PLC, where we've seen some 11 million units of shares traded so far this morning. At about this time last week, I think we saw Chams trying to move away from the 20 kobo per level that it had been for some time to some 24, 25 kobo. But today we are seeing Chams trading at 28 kobo per share. It looks like the investments of some new directors that was announced in February is really driving up gains in that particular counter. The introduction of some new executive directors seem to be bringing in some huge demands, as well as the 3 kobo that has been declared in dividend by the company, which is the very first in some years. But basically, if we look at the sectoral performance so far, we're seeing a bit of moderation in the losses across the banking sector side of things, given the recovery that Sterling Bank has made from the losses it had some yesterday. It's up right now some 3% plus, and we've seen the likes of Nigerian breweries also trying to make some gains in the market. But if you look at the losses so far, Fidelity Bank is currently down, and of course a couple of other companies. ETI is down some 2.22%. So right now it's a bit of flat movement or sentiment that we're seeing basically in the indices of the banking segment, banking side of things. So the consumer goods side of the market, we have seen a little bit of flattish movements too, given the gains around the Nigerian breweries, but it's being weighed down by some other, the losses we are seeing in some other counters on the market person.
At least for today, whether it's earnings or news that you think we can keep an eye on, Tempo. Anything on the radar yet? It's early morning hours of today's trading day.
Well, I think the fact that GT Bank will be paying out the dividends to investors today, some 2 naira for the 5 kobo in total dividend, that's the final and the interim, is something that is expected to mark down the price of this particular company. Yesterday we had seen it trading at the range of 33 kobo, 33 naira 20 kobo, and then it moderated at 34 naira and closed at that for the day. It was on offer as well yesterday, but so today we'll just basically see how things pan out on that particular counter. So far we've also seen the news from Afro Media. The stock exchange has now lifted suspension on Afro Media. It is the company that actually performs quietly in the market, but the fact that they've released their financials that placed them on suspension due to the delay on the release of those Q1 December 31st, 2018 earnings, now that it has been released, we should see a bit of interest in this particular company going forward. I mean, that's the only media firm that remains tradable on the Nigerian Stock Exchange here, Bosun.
Okay, Tempo, let's wrap up the show. Thank you so much for your time. Business correspondent live from the Nigerian Stock Exchange, Tempo Lashaji. Thank you so much. See you tomorrow. And everyone, have a great day. I'll see you then. Goodbye from Lagos.